Hello guys, welcome to another backtesting video. Today I'm backtesting the data of Thursday 5th October 2023. So this week many interesting things happened as I'm gonna show you right now. The market is clearly in a downtrend, making lower highs and lower lows right around here. There was a daily fair value gap made between the Monday and the Wednesday candle between here. So what we can anticipate was literally on Wednesday I was looking for this fair value gap to get filled, which got filled to the T, right? So but my bias was not clear on Wednesday, so I decided not to take the trade on Wednesday. So Wednesday was a no trade day for me, so I waited for Wednesday. And even here on DXY there was a fair value gap here to get filled. Even here on Wednesday I didn't take the trade because my bias was not clear. The market could have easily continued to the upside, but also there was a fair value gap, so it made sense to come down, right? This was my reasoning for Wednesday. So just because I was patient and I waited for Wednesday's candle to close, now on Thursday, going on to Thursday, my bias is a little bit clearer. Now I'm looking for buys. Why? You may be asking, bro, the trend is bearish. Why you're looking for sells? Why are you looking for buys? Because I trade daily bias. I am not a swing trader. I'm an intraday trader. For me, it only makes sense what's happening on that day and previous some days, like what's happening here, right? That's what matters to me. So here to be looking for sells, I would need a bearish candle, something like this. So it only made sense for me to look for buys, right? And on also DXY was showing that there is this much fair value gap left to fill, right? So it also made sense for DXY to come and fill up that fair value gap before continuing to the upside. So keeping all of that in mind, I was looking for sells on GBP USD. Now let me show you my analysis quickly and let me show you the trade for what you have came here. And now I'm looking for buys, obviously, so I have to mark a demand zone. On the 4-hourly there was no clear demand zones and also no clear change of characters. This was the change of character on the 4-hourly to the downside. This, you can argue, this was the accumulation. The market always, before making a move, it accumulates, right? And also here the trend was changing from bearish to bullish. So whenever the trend is changing from bearish to bullish, there is a supply zone reversal pattern, as we all know. It is also known as drop base rally, right? We have learned this before on YouTube. It's a very, very important concept. Here we can see exactly that happened, drop base rally, and this shows us that now the supply zone is reversing and might be now the bulls are in control. So many things coming together and telling me that it made sense to buy. So I took the risk and I was looking for buys, simple as that. So now let me quickly show you my DXY analysis also on DXY. Whereas on DXY my daily bias, let me show you now the 4-hour was now making a rally. Obviously, if I'm looking for supply zone reversal pattern on the GBP USD, I will look for demand zone reversal pattern on DXY. So it was a rally based drop, exactly the opposite on DXY. So now I will look for supply zones to trade from on DXY. As simple as it can get. Simple. Whenever we are going down, we look for supply zones. Whenever we are going up, we are looking for demand zones. And also according to the Asian range, we decide our supply zones. So I marked these supply zones at the first, right, on DXY to trade from. But now it made sense for me to mark this weak M15 supply zone. Yeah, the market could have not respected this and gone there. That would be totally fine. But we also have to adapt to the market. According to the Asian range, I decide the zones I'm trading. So this was the zone that came to my mind, and also seeing the charts, that zone literally made sense to me, so I took that. And also on GBP USD, the hourly demand was here, as you can see, but it was so far away, it didn't make sense for me to go here and all the way come up again, because if the market was going there is also a high chance that now it might continue to the downside, right? So the most healthy demand zone was this one that I was looking for, not one of the strongest, as I've written here, weak M15 demand zone. And we also learned in this trade that weak demand zones work too. So now basically what I was looking for was the Asian low sweep. There was Asian low sweep here. There was an inducement right around here. You may be asking, bro, why this is an inducement? This is an inducement because the move happened at 130, and also the Asian low was swept. Asian low swept, 130 move. Many people would have entered here. They have got induced, their position got induced, and there's also a demand zone. They didn't have the patience. Whoever didn't have the patience here would have paid. And after seeing this beautiful M15 rejection right here, this was the candle which literally led me to take the trade. A beautiful M15 rejection candlestick, and after that a very beautiful bullish momentum candlestick, and also known as morning star formation, which is a bullish candlestick reversal pattern, as we know. And also if I show you DXY was giving a bearish engulfing candlestick after the inducement, sweeping the Asian high. So many confluences coming together, comparing the GBP USD and DXY. It's like solving a puzzle, right? So many things coming together and telling me that it makes sense to buy GBP USD and sell DXY. So I bought, and pretty much the rest was history. If I targeted a 1:3, I would have won this trade. If I targeted the Asian high, I would have break even the trade, because obviously I would have break even the trade taking partials. But it was an overall winner. I considered this a winner because my target was 1:3, and the rejection was so clean that I assumed that I would have got a sniper entry right here on the M1. But let's see. And look, one more thing I learned in this trade was the smart money always accumulates in a zone, right? Look here, market went down, came up, literally made a double top here, right? Breakout, retest on neckline, went up again. News came in at 6 p.m. There was news, unemployment claims on Thursday, and it's also an NFP week. Came down, swept all of this liquidity right here, and then made the main move. Now this is the main move right here. This was the main move that we wanted to ride, but that happened after manipulating all of these orders. And also this demand zone was made on New York session. And whenever we are trading in New York session demand or supply order block, we want to trade on the New York session of the next day, because London session might be a fake move like this. This was a New York order block, and we entered on London. Obviously on the New York session there are buyers here, right? So when the New York session opened on the next day, it came down again, swept all of the liquidity from previous day, and then went up. That's how market operates, bro. That's how the market moves. If you understand that, that's what you need to understand. Here also you can see the smart money literally accumulated orders here, made a fake move again, boom, went up, swept this liquidity from the early sellers, and also swept this previous structural liquidity right here. As we can see, as I will show you by zooming out, it swept this liquidity right here, right? And after sweeping that, the main move happened to the downside, what we were looking for. So this is how the market moves. Smart money always accumulates before manipulating, and then that's why we consider the term accumulation, manipulation, distribution, because the smart money accumulates first. It accumulates orders, retail traders orders, and some other hedge funds orders, and then manipulates it when the news comes out. News is basically the big banks are manipulating the market, taking all the stop losses and then making the move, something like this. If we can master it and be on the correct side of the market, we'll be profitable.